Hi everyone.
Hi everyone, good afternoon. Thank you for joining our webinar.
This is Alok from Tax Mantra and we have got Hers from VComply. And today we would be doing this webinar on importance of processes and how GRC can help your businesses to grow. So we were waiting for a couple of minutes to join more people, but I think let's start now. So let us understand why do businesses struggle to grow, in the sense that a growing business would need from a growth stage to a mature stage, a business would need to do a lot of stuff. If they don't do, and if the founder or the leader at the leadership level always gets stuck and is in the firefighting mode with compliances, with finance, with people, or with processes and technology, the business will never be able to scale or to grow to its capability. So if that is the case, then, and I think Hers, you would also agree, this is the reason why most of the businesses are not able to grow. The founders are stuck with too many things on their desk, all the manual things, and their time and their mind is always consumed with things which they think that they need to micromanage, and because of that they are not able to thought through, they are not able to create breakthroughs in terms of the next growth, in terms of strategies, in terms of the new market development. And I think because of that, it is very important that for a business to create breakthrough, and for that to happen,
so I think also, look, what you're trying to probably say is that, there's a lack of documented processes when we look at some of the businesses today and the challenges that they are facing. And probably because of these lack of documented processes, they are constantly stuck in that daily firefighting mode when they come into the office. And, people are not able to really think strategically. And they're mostly stuck with their daily routine activities without being able to get time for strategic growth activities that can drive the business forward.
Yeah, and because of that, since that is not there in the system, the business will not be able to grow to its potential. So according to us, and what we believe based on our experience, where we have seen many businesses, we have structured processes in a day-to-day life for businesses, growing businesses, and we understand that the first step each leader or a founder needs to do if he wants to take his business from a point A to point B in terms of scale, is the first thing is to assess the gaps. He needs to undertake a process audit or a audit with respect to risks which are associated to that particular business. If he feels that he doesn't have the internal team to do that, he can always take help from external experts. So I think that's the first step, wherein the first step is to assess gaps. I think that is very, very important based on the nature of the business and also the current state at which the business is.
Absolutely.
Yeah. So once that is done, Harsh, the second step is how do you set right, strong processes?
That's correct. Yeah.
So once you have gaps, you have identified the gaps, you have created very strong processes which would help in terms of filling up those gaps. The third step would be to map those processes with owners and responsibility and accountability. So suppose we say that a few set of responsibilities or accountability need to be taken care of on a daily basis or on a monthly basis in terms of tax filing, GST filing, bank reconciliation, governance issues, in terms of
even internal processes.
Internal
so maybe
process,
your MIR reporting, your MIS reports that need to come in on a monthly basis. Even those things can get missed out if the processes are not mapped with the right process owners.
Yes, so that needs to be done. Once that is done, then the fourth step would be to automate processes with technology. Once you do this, and your role as a leader is transformed from someone who is micromanaging manually on a daily basis processes and systems, the role shifts from being micromanager to someone who is only working on risks, on deviations, on reports and follow-ups. And I have seen, even in my experience, Hers, that my time with the same kind of productivity. In fact, my productivity has increased with 1/4 of the time. So now my role is only to focus on deviation and not on micromanaging each and everything.
And in fact, this is a very popular management concept. I think a lot of you have already heard about this, management by exception, and which is what we want to stress upon. So, you should only be focusing on exceptions, being on the top of the pyramid, which is the strategic core. And I think, that's when you can drive value as a business owner.
Right. So, having said that, in this webinar, so we're starting this initiative wherein we do monthly webinar, and the objective of these webinars would be to empower leaders in the business so that they are able to grow their business in terms of processes, in terms of identifying the risks, in terms of creating right ownership, right accountability, and how do we automate those things using technology. So in this webinar, Harsh, what we would be covering is we would have a overview on GRC. GRC, by the way, is governance, risk, and compliance.
And we will explain each of these terms as we go along with the webinar. So
features of good governance, then why do we need it? Pitfalls of non-compliances, and how do we establish a very successful GRC program or process in the organization. So let's start with what is GRC, and Harsh will help us to understand what is GRC.
Right. So as Alok mentioned, GRC stands for governance, risk, and compliance. And these are three disciplines that can help an organization meet its objectives. So when we talk about objectives can be multi-pronged. So you would have strategic objectives on one side, and then you will have operational objectives, and then you will have some non-core objectives for the organization. So these could be, your CSR activities, your sustainability activities that take care of the broader stakeholders within the organization. So governance, risk, and compliance, these are three areas that kind of cover all of these aspects within the business. So governance sits right at the top of everything. So governance is right at the top of the pyramid. Obviously, you have risk management, which can help you take care of your various risks at different levels of the business. So again, operational risks are right at the bottom of the business, and then you have strategic risks. So strategic risks include things like reputational risk for the brand. So, what happens if, say, for example, an internal fraud is discovered inside the business? How does it affect your stock price? And for companies that are a bit smaller in size, how does it affect your business continuity overall? So, if there's a fraud, does your business come to a standstill, or do you have processes in place that can help your business kickstart again? So governance, risk, and compliance, each of these three areas would be explained during the course of this webinar separately. And in case you have any questions, do feel free to stop us in between, and we would love to answer your questions.
Yeah.
So we're going to break this down into three areas, like I mentioned. So the first area is governance. So it's the act of governing an organization to achieve business goals. So as an organization, every organization has some specific business goals that they would like to achieve. And what governance does is, so good governance elements are, like if you see this diagram on the right hand side, you have alignment, you have direction, you then have expectations, and then you would have delivery of those expectations. So those expectations need to be delivered. Once the delivery is done, you would always be in a scope of continuous improvement. So you would want to keep on improving on whatever expectations the organization delivered. And once you have those improvements in place, you would want to manage the risk that arises out of those improvements. So it's a full circle, as you see here. Responsibilities translate into alignment, alignment translates into direction, and then expectations, delivery, improvement, and risk management. So this is a full circle for governance, which covers all of the aspects of good governance. And these are components that you require within the business. So I would leave it to Alok to elaborate on some of these elements here before we go on to the next slide.
Yeah, so I can give you a case study. Suppose that your company is listed on the stock market, and there is a litigation case, or there is a litigation with the government in terms of some penalties. So how do you keep your stakeholders informed? What is your process in terms of giving the information to the stakeholders, to government, to SEBI, to stock exchange? And do you have a process to do that? If you have a right process wherein you set the expectations right, you have the right delivery model, and if you do that, then you de-risk and you kind of reduce the risk in terms of how your stock market variations and those things. So it is very important that be it positive news, negative news, be it the processes, be it anything which needs to be transmitted to your stakeholders, there has to be a process, and that process needs to be governed by a method. So as Harsh said, that the first thing is the alignment, then the direction and the expectation. So what do we have? What do we expect from a news? So if we inform in advance that there is a litigation which is going on, or there is a case which is going on, and these are the negatives, or these are the risks which might come in terms if the case goes against the business, those, so we are setting up right expectation in terms of negative or positive news, and how do we deliver. So a very matured company, a company who knows that every news on business, on other areas, will have massive impact on the growth and also on the reputation in the market. So that really, so GRC can really help in terms of you drive the right process and govern it properly.
So I would also like to add here, from a slightly smaller business perspective. So if you're a small and medium enterprise, even then governance is really, really important. In fact, it's all the more important if you're starting up, or if you're a mid-sized company that's really looking to scale up. Because if you look at the fundamentals that are there on the right-hand side of your screen, starting from responsibility, I think every organization would have to have all of these elements in place if you want to achieve long-term success as an organization. So if you look at any client project that you're working on, or any client deliveries that you're working on, obviously there needs to be an alignment with the client's expectations. There needs to be a direction in which you're moving towards. So if you don't have a clear direction, and if you're unable to satisfy your client, in all likelihood, the client would not come back to your organization, and in all likelihood, the customer is going to be dissatisfied. There's going to be a word out there in the market that it's probably not worth working with this company because they don't deliver on expectations. There's no improvement in the organization, and so on. So these elements are really, really important here. And now we would move on to risk. So risk is, so what is risk? Risk is an uncertain event or condition with a positive or negative impact. So again, everyone looks at risks in a negative sense, but today we want to help you broaden your horizon and say that risks need to be classified into two sides. One is positive risk, and the other is negative risk. So the risk cycle starts from measuring risk. You would assess the risk, you would evaluate the risk, and then you would go ahead and manage the risk. And once you've managed, you would go ahead and measure the risk. So sorry, I started with measure by mistake. So it starts with assess. So it's assess, evaluate, manage, and measure. So anything that does not get measured cannot get managed, and vice versa. So Alok, if you want to elaborate on risk.
Yeah, so a very interesting thought. Even the risk can be, there may be risks which are uncertain, but by using technology and by using processes, you can actually quantify risks. Not only in terms of the governance risk, but also from a compliance. What are the risks if there is a non-compliance which is there? So what a technology or a process can do, in this case GRC can do, is actually document and map all your activities and compliances, so that you, in most of the case, you de-risks. You know that the GST return needs to be filed by 20th, or you know that the annual GST audit needs to happen by end of December. So and if you map those responsibilities with right ownership in the GRC platform, you are de-risking and you are creating accountability within the system. So I think risk needs to be assessed, identified, evaluated, and then you assign it and you create ownership, and that's how you manage it, and then you eliminate it completely. Or if you can't fully eliminate, you measure and take rightful course of action.
Right. And let's move on to the third component here, which is compliance. So again, compliance is being ethical with integrity and conforming to a specification, policy, standard, or law. So when we look at compliance, it's a lot more than just regulatory stuff. So it's a lot more than GST, income tax filings, filing your TDS returns. We're looking at a broader aspect here, which is first starting from inside the organization. So within every organization you would have a set of internal policies. So just to give you an example, if you have attendance policies in place that say what time should people come into work, and which are the days of the week you work, whether you work on Saturdays or not. So that's a policy, and you expect that your employees comply with this policy that you have in place. So you wouldn't want an organization where people come in their own sweet time and treat the organization like a club. So that's where compliance starts. Compliance starts right at the bottom, right from within the organization, and then moves outwards towards things like regulatory compliance, things like GST filing, TDS filings. So when we look at compliance, again, compliance needs to be looked from two different aspects. One is internal compliance, and the second one is external compliance. So only when you have internal compliances in order can you go ahead and achieve external compliance. So just to give you a very, very basic example, if you don't have your P&L and balance sheet in place, you can never go ahead and file your tax returns because you would not know what are the taxes that you need to pay. So, what we do here is we would first audit, we would do that gap analysis like Alok mentioned right at the start. We would monitor these audits, we would interpret the results of the audit, we would adjust according to what the audit says. So, if there's any deviation in what's been noted during the audit, we would go and make those adjustments. We would test whether those adjustments are filling up the gaps. Then we would deploy those processes within the business. And again, the cycle goes back to audit. So once those processes have been deployed, we would again go ahead and audit the same processes to make sure that things are on track. And again, it goes into monitoring. So again, constant monitoring is something that is very, very important. And this is where the role of tool comes into play. Because, you can audit these processes, you can have the expertise to do all of these various things. But unless these things are being monitored on a continuous day-to-day basis, there's a very good chance that things might get derailed. And it's very important that you trust, but you still verify at the end of the day whether the things that you expect to be done in your business are being done or not.
Yeah. So and let me give you another example in terms of the compliances. How do you de-risk your business for any penalty or stringent fines for non-compliance? So based on the business case, based on the nature of your business, based on where you operate out of in India or outside India, because there may be scenario wherein you have branches outside India and there are different laws which are applicable to your business. The first thing which Hers very rightfully said is that the first thing is to assess. So we need to know what are the compliances, what are the regulations which are applicable to your business based on different areas of operation. A company might operate in different states, and there are different laws in terms of labor laws, in terms of other licenses, in terms of factories. So those laws needs to be mapped on the system, and we know that based on the requirement under the law, in which geography of the operation, what are the compliances which are required. And once it is mapped and put on the system, and the right accountability or accountability owners are created, then it becomes very easy for an organization to map and to measure as to whether the compliances are on time. And if there are risk of non-compliances, rightful action can be taken to reduce risk or de-risk completely in terms of non-compliance.
Right. So if you think compliance is expensive, try non-compliance. And if you go by statistics, the cost of non-compliance on an average is 2.6 times more than the cost of compliance. So, a lot of us think that, compliance is a huge cost to the organization. Why should we have systems in place? What is the importance of having processes in place? But let's say, if there's a significant business risk that goes ahead and impacts your organization. So let's think of a basic example. So if you don't have fire extinguishers in place in your organization, or maybe if you have fire extinguishers in place and they are not refilled on time, suddenly your office catches fire, and you find out that, your fire extinguishers have not been refilled and you're not able to extinguish the fire, it's a huge risk that can impact your business. And, the compliance, so maybe filling up your fire extinguisher might have costed you a few thousand rupees, but here we are looking at a few lakh rupees in losses, as well as from a business continuity standpoint, everything might just get damaged at the end of the day, and, everything might be in doldrums. So non-compliance has a huge cost associated with it. So moving on, what are the characteristics of good governance? Let's just look at these 9 points that we have here. So you have participation. You have one is good governance needs to be very, very participative. Good governance does not mean it has to be a top-down approach. It needs to be a bottoms-up approach. Everyone needs to be involved in the organization. So you cannot leave any stakeholder out. All stakeholders need to be involved. So participation from your employees, participation from the government, from your shareholders, from your auditors. So from everyone, it's really, really important.
Then the rule of law, as I was mentioning in the last slide, in terms of where do you operate, if you have branches in different states in the country or in different countries, and based on the nature of business, what are the laws, what are the rules which are applicable to you. So those rules and compliance need to be mapped. So those also need to be taken into account. Then transparency is very, very critical. There has to be transparency in terms of processes, in terms of what is right and wrong, and if there is a deviation, or if there is a non-compliances, what action needs to be taken up. If those are standardized and transparent, then the leader of the organization can actually really delegate, even if there is risk in terms of compliances, and the team can take up that responsibility. If that is not there, that's a challenge. Responsiveness is very, very critical. Harsh, if you can suggest what if you can give an example on this.
So I think it's very important to be responsive. So let's say if there's a situation within the organization where there's suddenly been an employee who's been involved in an accident. As an organization, you cannot wash your hands off such activities. Your other employees who are looking upon you, as a senior management, they would expect that you take some action, and you're really, really responsive in responding to any such situation that may arise. And it's similar whenever we look at any customer facing incidents as well. So if there's a customer that's been dissatisfied, you've suddenly delivered an order and you find out that you've actually delivered the wrong item to the customer. It's very important that you immediately acknowledge that you've made a mistake. You need to be responsive, and that immediate responsiveness can give a lot of comfort to the customer. But for you to be responsive, again, it's very important that you have an overall governance structure and an overall culture of good governance within the organization. So and then the fifth point is consensus orientation. So again, there needs to be a common consensus within the organization where all stakeholders involved need to have some common consensus, some common direction as to why we are doing what we are doing, and why are we pushing for good governance. So we can't have people who are there on opposite sides of the table when it comes to the strategic direction that we take in deciding what our governance practices would be. And then you have equity. So I think it's very important that we have equitable standards applied to all people involved, all stakeholders involved. We can't have separate standards for our shareholders, or separate standards for our board of directors, or separate standards for employees. Everyone needs to be treated equitably, and there needs to be transparency. So each of these points is sort of interrelated with each other. So Alok, if you can take on effectiveness and efficiency.
Yeah, so once we have a right system and process in place, the effectiveness and efficiencies can be built in terms of compliances. Not so. I have seen in my experience, most of the companies, most of the smaller companies, they have the vision to grow, but they end up paying a huge amount of interest every year on advance tax, or for interest for late payment, or for non-filing of returns. Now, they know that they need to do it, but since there is no accountability set in, there is no process which is set in, the processes which are there, they are not effective. So because of that, if you have good governance and which is backed up by a process and technology, I think it becomes more effective. Accountability, as we said, that each and every responsibility, till the time it is not a responsibility, till the time there is a accountability set, and there is a clear cut owner assigned to that accountability. And accountability without any ownership really doesn't deliver anything. So accountability needs to set in with the right ownership and delegation, and with that, everything being taken through strategic vision becomes relatively easy, because then the leader can focus on strategic decisions, on growth, on future vision, and I think these are the very important traits of a good governance process within an organization. And if an organization is able to create these features of good governance, then the organization is very much ready for the next scale of growth. Harsh.
So again, why do you need it? So I think we've covered some bits of why good governance is needed. So let's just look at it in more details here. So like I mentioned, the cost of non-compliance is on an average 2.6 times more than the cost of compliance. So a couple of points that we would like to make here. One is underdeveloped operational infrastructure. So wherein what we mean to say is, you don't, a lot of organizations don't have a coordinated and a robust control framework inside the company. So, there's no coordination between inter-departments, and, the organization is small in size, and there's one person who's probably doing both accounts payables and accounts receivables. The responsibilities are not sort of aligned properly. There might be certain gaps in the system, and it does not give that person sort of a structured reporting where the person can identify where the problems are. So I think it's very, very important that you have a developed operational infrastructure in place. The second one is the diligence and due diligence is missing. So there's no clear-cut audit system in place where audits are just being carried out for the sake of audits. We bargain with auditors, and we expect that auditors carry out audits for unreasonably cheap prices. But what we're actually missing here is that diligence that needs to be there in the due diligence exercise, because then auditors just do audit for the sake of audits, and actually that audit is not being carried out in a very, very prudent manner, which kind of misses the whole point of the audit being in place. So the third point, if you can just take it on.
Yeah, so this which we have felt, and we have seen many companies from a very close point, wherein we see that the leaders of the companies, they are always in the firefighting mode. They have a very different to-dos on their calendar when they want to, when they start the work, or when they start their day. But since right accountability and processes are not there, they end up spending most of their time in terms of firefighting on issues, on trying to manage risks. And since these are not structured properly, they are totally wasting their time, and they're under leveraging themselves. And with a proper GRC and process set in, if you reduce your time in terms of firefighting and I would say spontaneous de-risking issues on spot, that is, you will end up boosting productivity and creating more efficiency, not only at your table, but also at a different level in the organization, because now you have a system and process and ways to de-risk and operate in a very different way. Very similar to managing finance and processes and human resource. So now let us take example of human resource. So if we know that someone is going to be leaving in say 60 days and he's in the notice period, can we document everything on the system in a way where in fact our GRC do give that an opportunity wherein we completely move all the responsibility from one user to another user by a click of a button. So that really creates a hassle-free way of reallocating and sending the documents and other thing to someone who has just joined. And also in terms of the processes, we may create a lot of processes internally for finances, in terms of reports, for working capital, for data, for creditor management, and those kind of things. If we create a process, for example, if we say that the leader needs to know, we have set up a process that this much of revenue is expected every week, and if the revenue is less than that, then there is a deviation report which goes to the CFO and CEO. So those processes can be set up in. Another thing is that most of the organization, most of the SMEs, most of the growing organization, they take all the decision not based on analytics and on data, but on their gut feeling, based on their general experience and general thought processes. And because of that, most of the decisions, since they are not backed up with proper data and analytics, those decisions go wrong. And if you have right process, if you have right system, I can give you one example. Now you are trying to increase your revenue, so there can be three sources from which revenue can come in. One is existing business and existing client, existing business. One can be existing client, new business, and then one can be new client, new business. Now, if you do not have a proper data to track from where your revenue is coming in, you would feel that this can be a good example that your existing client and new business cannot be done. You always try to get new clients, wherein you are not focusing on existing client, new business. That's the recurring income. So those data points will never be captured if you do not have the right GRC and you do not automate those things.
And again, finally, I think the most sought after bit that all of us are looking for is peace of mind. So it's very, very important that as a business owner, you have complete peace of mind. And that's only possible once these processes get structured. Once you have a dashboard that then kind of tells you, what's going on with your business and where are the gaps and, which part of your business needs most attention. Otherwise, you can keep guessing and you can always be in the dark while never knowing, what is it that actually needs your attention.
Yeah. So
let's just discuss some of the pitfalls of non-compliance here. So one is, like we mentioned, even at the start of the webinar, documentation failures. So, if you don't have a really structured compliance program in place, there can be documentation failures where, either the documentation is done incorrectly or the documentation is done, but the records of the documentations are not kept. So in India, by law, you're required to have at least 8 years of documents available for a statutory audit. But, if these documents get lost in the process or the documents are not stored correctly, not preserved, I think that that's a huge risk that you're opening yourself up to as an organization.
Inadequate reporting capabilities is also one of the very important point to note, wherein the company doesn't have the right reporting capability, and because of that, there are a lot of non-compliance. And lot of decisions which are not based on correct data point, but on the generic thought process which I was mentioning or referring in the earlier slide.
I think even things like investor dissatisfaction are really high when your reporting is not transparent, and when you're unable to tell your investor where their money is actually being put into and what is the return that they're getting on the capital that they've employed in your business. So I think reporting capabilities are something that are very, very important and critical to have. So the third point would be delivering services without proper approval. So again, if your process or if your internal compliance structure is not very robust, you can have instances where purchases are being made without purchases being authorized. And this opens up your organization to, different types of fraud. So there can be revenue leakages, there can be payments that are being made twice to the same vendor. So these are problems that happen where if audits are not being conducted on time, if your internal processes are not strong, if your internal processes are not being audited. And finally, the fourth point is insufficient communication. So, whenever the team's not communicating inside the organization, when people are not in sync, it can be a huge problem. So I think it's important that, things stay in sync and everybody is on the same page. There's a central dashboard where you can see, how the processes are mapped, who's accountable, what's the process performance been, are people responding to requests on time, are things stagnating within the organization. So I think you can achieve a lot with good governance. It kind of gives you a clear picture. It kind of, it's like the light at the end of the tunnel. So you actually get to see what's happening within the organization, and you're not kept in the dark, basically. So, finally, how do we go about implementing a good governance structure? So we do this in 3 steps. So there are 3 effective steps to GRC management. The first step would be to establish strategic decision. So I think one is, it needs to be very, very clear in the minds of the business managers or the founder of the business, or or the team that's really driving the business, to have strategic decision towards having an effective GRC in place. Because unless you decide that you want to be a well-governed organization, unless you decide that you want to be an organization that's perceived as ethical, that's perceived as well-governed, you can never take the next step forward. The second step, Alok, would be...
So the second step would be, how do you execute strategies and how do you manage risks? And that is very, very important in terms of having the right GRC in the place. And for that to happen, we need to start executing the strategies which we have built in the step 1, wherein we have decided the strategies for our growth, the strategies to implement the right GRC in place. We start executing those strategies and we start managing the risks which an organization might suffer. So that's step 2. And step 3 is with regard to ensuring compliance with corporate standards, policies, and procedure. So so these are the three steps. The step one will start with how do we create the right strategic points, right strategic steps. Second is how do you execute those strategies and then manage risk. Most of the de-risking will happen, and then ensuring that once you're done with first and the second step, how do you ensure that the compliances are very much within the standard which are prescribed in terms of policies and also procedure. So these are the three steps by wherein we can establish a proper foolproof GRC which can help an organization to de-risk most of the and from most of the governance and non-compliance issues.
So, like we mentioned, governance is, keeping the board informed about key risks and changes to the risk profile of the organization. So that's right at the top. So it's the strategic function of the organization. Then you have risk, which is an embedded framework and processes for identifying, assessing, and controlling risks within an organization. So you would first establish a risk framework, and then you would identify processes that can help you assess and control the risk that can have an impact on your organization. And the last thing would be compliance, where you understand and efficiently allocate resources to satisfy the regulatory and cultural requirements within your organization. So when we talk about cultural, so it means your internal organization culture, your internal organizational processes, and how they're aligned towards the overall strategic goal or the overall governance objective of the organization. So this is a full circle from compliance to from governance to compliance, and then back to governance again. So if you have any questions, we would love to take them at this point. And we've reached the end of the webinar. So any questions?
And in the meantime, let me just summarize so there are basically 4 steps in terms of how do you create effective governance within an organization. The first would be to do assessments of what are the areas wherein you need to de-risk your organization in terms of identifying. Once you identify, then you create processes. The third thing is that once you have the process, you have the areas wherein you need to bring accountability. The third step would be to bring in accountability, to assign accountabilities with the right owners. So that is, you are mapping processes with the issues which you have identified in the step 1. And fourth is that once you are ready with 1, 2, and 3, how do you automate these things using an effective GRC online tech platform? So I think these are the ways wherein companies can scale. Company can actually scale 10 times in terms of growth, in terms of revenue, in terms of operations, if they are able to automate and de-risk using an effective GRC system. We are open to any of the queries if you have. And if you need any, if you have any query, you can post. We will post this webinar on social media, and you can ask the query there itself.
So I see we have a question that has come in. And 1 second. So it's a question for Michelle. What should be the starting point for GRC implementation in a startup? So, it doesn't matter whether you're a startup or a mid-sized organization. I think the processes are pretty much the same. So I think let's just go back to right at the beginning of this presentation, where Alok mentioned this whole structure where you can implement GRC, where you start with gap assessment. So where you would have to assess gaps within the business to identify which are the problem areas. Once you've done that gap assessment, you would set processes. So this would mean that you set up SOP, standard operating procedures, on how certain things are done within the organization. And once those processes have been identified and set up, you would have to map these processes with respective process owners. So these process owners are actually individuals who would be carrying out these set of internal compliances or responsibilities. And the third step, or the last step here, is to automate it with a tool. So, there are various tools available in the market. VComply is one of the tools that kind of helps you do that, where you automate all of these processes with technology. So where you create a central dashboard for your organization, where you would set up various control areas within the organization, and then map these processes to responsibility owners or to process owners. So I hope that answers your question, Michelle. In case you have a follow-up question, you can always ask it now. You can alternatively get back to us over an email interaction. Right, so I don't think we have any more questions, and we would be ending this session here today. So thank you very much for joining in, and we hope you have a great evening. Thank you.
Thank you.